Welcome to Trading-Pennies.com Chart of the Week, where every week we will examine the trading strategy behind one of our explosive daily stocks picks. All of our strategies are covered in detail in our manual, Learn How Professionals Trade the Penny Stock Market, available at our site at Trading-Pennies.com. This week's chart is Copper King Mining Corporation, ticker symbol CPRK, a basic materials company that engages in mining activities that include exploration, development, extraction, and processing of minerals in reserves in Utah. What caught our attention in this stock, and reason we placed this on our stocks to watch list for the near future, was the high volume pullback from a prior significant price expansion into multiple converging support levels amongst individual and multiple time frame charts. As noted in our manual, professional traders look for convergence points amongst the various chart patterns not only in the single time frame, but simultaneously in multiple time frames, anticipating truly significant key pivot points in which to both enter and exit positions. It is these stocks that professional traders place on their watch list, as they know that this is where significant volumes of traders waiting to take action is the greatest. It is these stocks, due to the degree of convergence, that are poised to break out for explosive profits, as traders within every time frame will all rush in to get a piece of the action as they see market psychology suddenly shift to frantic buying on a mass scale. What we saw initially on the daily chart is that Copper King Mining is approaching two significant price support levels at the 0.011 and 0.012 levels. What makes these price levels significant is that both served as prior significant resistance levels. As noted in our manual, the strength of a price resistance level is based on how many times a stock approaches it from below and causes a stock to be turned away. We generally watch a stock that approaches a resistance level from below, as if and when the stock breaches this price on significant volume, this level in turn tends to become strong support if and when a stock approaches it from above, such as on a pullback. With this, we saw the 0.011 and the 0.012 price levels as near-term support in the near term on the daily chart. We looked at the 0.012 level and not the 0.014 level, as the 0.014 level had previously been broken by the retest of the pullback from the prior breakout. We also saw that the 0.011 and the 0.013 levels corresponded to a region between two trend lines on the daily chart. The first representing the lower boundary trend line of a wide up channel as drawn from the two prior spike highs and off of the lows of the base that preceded the initial breakout. The second drawn from the lows of the original bull pennant of the tail end of the base that preceded the prior breakout. Last, we saw that the 0.01 to the 0.012 level coincided with the downtrend line drawn against the lows of the current pullback. Thus, on the daily chart, we see a potential convergence of support at a price level, uptrend line, and a downtrend line, which appears to be converging at the aforementioned price levels of 0.011 to 0.012, and appears to be forming during the trading session of March 9th of 2009. On the monthly chart, we saw support at the 0.01 price level, which also represents a natural support of psychological significance. On the weekly chart, once again we see the 0.011 and 0.012 price levels as potential support, as both on a price level basis and that of the lower boundary of an uptrend channel drawn off the prior spike highs and off of the lows of the recent price expansion. On an intraday basis, the first thing we noticed was that the 0.011 to the 0.012 level coincided with a pattern price projection target. As noted in our manual, the time frame in which a pattern develops is important to traders, in that it often predicts the future price target of the stock and the time period in which it will take to reach this price target. The most recent high at the 0.03 price level on March 3rd of 2009 launched from an intraday price level of 0.021. This resistance level, termed near support, was tested on March 5th and was broken on volume during the late afternoon trading session. On an intraday basis, the 0.021 price level would now be considered near-term resistance for future price moves. What we are interested in is that the period in which the high at the 0.03 and the test and subsequent break of support at the 0.021 developed suggest a similar price move to the downside that would develop over a similar period. To that end, we can project a future price target of 0.012 to develop within the next 1 to 2 trading periods. What happens at this point is impossible to predict, yet this represents a key pivot point and as such is important to the trader, as these are points of pivotal movements in stocks, be they continuation or reversal in trend. We also see that the 0.00011 to 0.012 price level serves as a lower boundary of a downward sloping channel as drawn from the peaks of the recent intraday price movement highs and projected from the lows of the same. Together, once again, we see convergence of these intraday patterns occurring during the trading period of March 9th of 2009. Thus, when asked why we place Copper King Mining Corporation on our watch list of stocks, our response is that the stock nears the 0.011 to 0.02 price levels, which we have seen represents near-term support on multiple patterns within multiple time frames of analysis, and as such represents major key pivot points. And as all traders know, it is a price volume action at these key pivot points which represents the period where the majority of the money in the market is made trading. Until next week, from Trading-Pennies.com, this is Thomas McClellan, where our goal is to help you learn to become more successful